Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. Around the horn, we shall travel. Let us go to Mr. Cory Edge, Realty. How you doing, Big C?
I'm doing great. How are you?
Fantastic. Thank you. How
Love
can we
it.
not be, right? Record-setting day on the Dow. Things looking good.
Hey, where's my
good.
cue? Another
Where's your
record-setting
cue?
day, right?
That's true. I failed that one.
Yep.
I failed that
That's
one.
yeah.
Dwight Millard, Highlands Mortgage. Dwight, what kind of day was it today?
Another record-setting day, John.
There you go. There you go. That's it. How are you, my friend?
Like I'm doing fantastic. Loving these rates.
There you go. There you go. And we will definitely be telling you what those rates are after we, of course, get through the stock market side of things. Well, welcome, fellas. Welcome, everybody. We appreciate you joining us. Let me tell you what we have lined up for you this afternoon. After the stock market recap and going through the commodities and so on and so forth, we're going to talk about something that's never easy to talk about, but unfortunately, it's a reality of life, and that is divorce, right? Divorce, never, ever easy. It's emotionally difficult. It's obviously financially difficult. And for many couples, the biggest question is what happens to the home, right? It's for most people, their biggest, if not, right at the top of assets, right? One of the major assets they have. So what are your choices? Do you sell it? Do you keep it? Do you buy out your spouse? You have all these different options in front of you. Well, today what we're going to be doing is we're going to be breaking down what your real options are, the financial traps to avoid, and some very smart moves that the boys have put together to protect the equity, the credit, and the future wealth after a divorce. It's a tough subject, guys, but, as many of us know that after, roughly 50% of marriages, unfortunately, end in divorce, we are seeing a trend moving a bit higher as far as they call it what is it, Cory, called the gray divorce or the grain, remember that term that we used a while back, where people, later in life, like in their 60s and things, they're getting a divorce. And what prompted me to kind of bring the subject up, there was a very interesting article I thought about you, Cory, in the Wall Street Journal yesterday, talking about how people in their retirement years, let's just call it, that are single, whether it's through, the loss of a spouse or, again, a divorce, what many of them are doing, they're like, I don't want to sell my house because maybe it's paid off or they enjoy where they live. So what they're doing is they're bringing in, we'll call it roommates, right? People of their same age, same generation. And they're coming in and renting a house from them. And they're raving about how successful they are. They say, look, not only do I get a little bit of extra income coming in, but most importantly, I'm not lonely anymore, right? I read one person, they brought in two roommates, right? You never talk about roommates and kind of the grain, generation to bring in roommates, but this seems to be a new trend, they said, that's beginning to develop. And then I thought, well, okay, this could be a situation where, unfortunately, if you have a divorce and you do end up keeping that house, obviously we've done a number of shows on renting out a room or some other ways to offset some of that mortgage payment. But, again, that's a subject for another show, but I thought that was interesting. But once again, here we have the situation with the house. It's going to be a major contention in a divorce, and especially if you have a lot of equity in there. And we're going to lay out some very important steps that you need to consider if indeed this happens. Cory, how often, say out of a year, how many transactions do you get involved with, do you think that involve a divorce?
It really varies. I mean, we kind of talked a little bit on the show just briefly about Richard Lace and kind of what he's doing, and he does a lot more of these than I do because a lot of times they're just trying to determine a value, and then by the time I get involved, the decision's been made, and now we're going to sell it, which is kind of the final step. But a lot of people go through the valuing process prior to that, so I'd say 10 to 15, 10 to 12, somewhere in there, depending on COVID was big. Like a lot of people figured out during COVID, I love you or I hate you. We've been together, nonstop for a year, so let's figure this thing out. But no, I'd say 10 to 12 I'm sure there's a lot more than that.
Yes, exactly. What's probably one of your biggest takeaways, dealing with this a lot from a realtor standpoint?
So by a lot of my stuff comes via the divorce attorneys, right? I have a lot of clients and friends that are attorneys. So usually what will happen is they'll go in, the two couple or the couple will go in. They all have their favorite realtor or their attorneys have their favorite realtor. So either the judge has to approve or both sides finally agree on somebody. But when I do get people that haven't been to that step yet, the first thing I always tell them, I was just talking to a client about this last week, unfortunately, you got to remember, get the emotions aside and all that stuff. Easy for me to say, but you got to get that in line. And remember that most houses are owned 50-50. You own just as much as she does, or you own just as much as he does. So one spouse's decision isn't more important than the other spouse. It's a 50-50 thing. Now, I will tell you, I had one a couple years ago where unfortunately my client, my friend, was the wife and she thought it was 50-50 this and that. Well, no, it was bought in the husband's trust on his own that was gifted to him from her. Like, so
Whole nother issue.
the first thing, make sure who owns the house and what owns the house and what entity, and then figure out from there, because I have seen over the years a few surprises where people are like, dang, I don't even own any of this. And now we've got a big problem here.
And especially when you come similar to that situation, but when you come to the marriage already owning the house, right? Let's say that
True.
the guy owned it before, they got married, and she thinks, and he never added her to the title. That creates a whole nother set of dilemmas there.
Well, you get into, and again, my client I was talking to last week, they had put in some, I don't want to give too many details out, but there was some inheritance money that went into the house. And so then the question becomes, well, wait a minute, I didn't have to do that, but you did. So the court will claw some of that back to that person's favor. And so there's all kinds of weird stuff that happens.
Absolutely. Dwight, what kind of experience do you have in that area?
Well, I mean, I got plenty here, John, I can throw in there, but from a fortunate or unfortunate, but currently I'm not seeing a lot of divorce transactions. Hey, we're getting splitting it up, but I do see, John, I would say I got to say 80%, if not maybe it's 70%. So 7 out of 10 are blended families. It's new partners coming together. I mean, it's maybe they've been married or date for a while, but yeah, it's not the original rodeo, I don't think, in most cases. So I am doing that, and which gets a little more complicated there too, because then if there is a property owned out here and things like that, it's it's not as straightforward as it used to be.
Yeah, no, not at all, and especially right, Cory, if you're talking someone with multiple properties, right? We're focusing this afternoon just on the primary residence, but you start adding in 1 or 2 rentals, if not more, and it get even more messy as you're talking LLCs. Who owns the LLCs? And yeah.
Well, and there's all kinds of spousal riders in the LLCs.
Yep.
Sometimes, as crazy as it sounds, sometimes if you have multiple properties, it's a little easier because if one spouse needs cash, the other one wants properties, you can divvy them up and then that person can sell what they want to while the other half
Yeah, but
keeps.
it's never equal.
Oh, hey,
just ask me.
It's
I know.
never equal.
No.
But I do have, and maybe I'm getting too far along. I'm curious, Dwight, when we start talking about this, if you get a couple in there and they're newly married, but somebody had gone through a divorce and their old spouse is still on the mortgage, like, is that person hit with the full old mortgage payment or half of the old mortgage? Like, there's all these dynamics.
Yeah, no, and that's a great question, because unless I can prove if he's still on the property, I mean, a lot of times they do a quick claim, right, Cory? They were told to do a quick claim, they're still liable.
Which means nothing, yeah.
It means nothing. As long as I can verify 12 months of payment consecutively, I can eliminate that debt from that. But most of the time there's not 12 months, or that there was I paid half of it in June. Well, now it's a problem. So so I have to factor that in to that. And that doesn't make the other spouse happy when I say, I'm not sure I can get this because you've got this debt over here. So you got to kind of know all that.
Yep. Yeah, so there's a lot of moving parts, and we're going to, like I said, we're going to try to simplify it for any of you that are going through this unfortunate life event, or maybe in the future. But better to know ahead of time than when you're in the midst of it, to say the least. All right, guys. Well, we'll get to that here momentarily. As I said, first of all, let's go to the stock market side of things. As Dwight so correctly mentioned, it was a record-setting day, at least on the Dow Jones Industrial Average side of things. Obviously, no economic reports. We are expected, believe it or not, you've heard me say this on the stock updates, we are expected to get the CPI report, I believe, on Friday, even though the government, assuming is still shut down, they still said they're going to release that. So we'll see, what kind of impact that has and what the number looks like at that point. But in the meantime, we're in the heart of earnings season, right? This is what's driving everything. Had some really good earnings reports this morning that kind of set the tail, and some of these earnings reports I'm mentioning are Dow components. So that's why the Dow did well and closed at a record area. We came close. We hit a high today of 47,125. I was hoping I was going to be able to come on the show, guys, and say, hey, we closed at Dow 47,000 something, because obviously that is a major, major milestone to close above 47,000. But we came close, 46,924. That was a 218 gain on the Dow. Nasdaq lost 36. The S&P actually finished unchanged on the day. The drivers inside the Dow, well, first of all, is Coca-Cola. A lot of people are drinking soft drinks these days, up 4.06%, $2.78 gain, 71.22, better than expected numbers. 3M, Dow Component, up $11.86, 7.67%, 166.64. Again, that was a company that also reported better than expected. RTX, formerly Raytheon, reached an all-time high after they beat and they raised their earnings report. Stock shot up $12.33, 7.67% to 173.04. Let's see. General Motors, surprisingly, man, did they beat. Big beat on those numbers. 14.86% gain on the stock today, up $8.62, 66.62. Let's see. Google. This is interesting. We talk a lot about AI on this program, especially on Mondays when my brother joins us. ChatGPT, OpenAI, of course, the parent, they announced that OpenAI, starting today, has a browser now. And so that put pressure on Google. The stock lost $5.68, right, coming into their neighborhood, 251.34. Let's see. Newmont was down $8, 9.05% loss to 86.30. I'll tell you the reason why in a moment. It was because gold prices tumbled today. So we'll come back. We'll hit the commodities, the interest rates, and then get into our topic, divorce and the family home. What are your options with Cory and Dwight? Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edge of Edge Realty, Dwight Millard of Highlands Mortgage. Once again, we finished with a record close of the Dow up 218 to a level of 46,924. NASDAQ lost 37. S&P unchanged. All right, onto the commodity side, 21-cent gain in oil, 57.24 a barrel. And oh boy, did the speculators have a ball today. Gold prices tumbled. Now, keep in mind, pretty much just gave back about the last 2 days worth of gains. So take that with a grain of salt. Yeah, largest one-day loss, I think, going back to 2020. $48.50 decline in gold, down 5.7%, $4,160.60 an ounce. Mr. Millard, 10-year Treasury down 2 basis points, 3.96%, sub 4%. How'd we do on that 30-year mortgage?
Hey, we're doing great, John. I mean, people are going to get back out in the field, I think, and start looking at homes. So according to Mortgage News Daily, 30-year fixed rate is 6.17. Okay, John, that's versus 6.36 last week. Right. So you've gotten a 20 basis point drop just in the rate coming on, the front of next week's Fed interest rate decision, which I think will get more people back out. We don't know what it'll do to mortgage rates, but it'll get people back out in the field looking at homes. But the 15-year, 5.75, the lowest we've seen it in a while. And then your FHA and VAs in the 5.9 range. So, 10 basis points under a 6%. I mean, I'm smiling, but we need the activity. People are still a little apprehensive, a little bit fear factor. So there's just still not a lot of confidence in, I guess, where the rates are at right now. So
yeah, absolutely. Well, that's great news, Dwight. Thank you for bringing us up to date on that. The final thing I'll mention back to the market, which kind of ties into Dwight and the yields coming down, et cetera. Pretty quiet out of Washington today. I think it was around 11 o'clock. Trump commented on a meeting with Chinese President Xi saying, maybe it won't happen, though there was not much else to report on the trade front. So that was the headline, right? Market's still paying very close attention. Is there going to be a meeting? Is there not? Still negotiate on the rare earth situation, et cetera. So things still very fluid coming out of Washington. But Cory, did you see that the president today demanded that the Department of Justice pay him? Did you see that? $230 million because they investigated him in his first term.
And I'm curious how that will play out when your boss demands that you pay. Like,
right.
Do they
and
have to pay? Is there an investigation?
Department of Justice. Yes.
It's very interesting. I also find it interesting, just me, like the construction going on. Like I've been reading this story about them tearing down half of the White House to build this ballroom. Like, what in the world is happening here? But anyway, it's like a cartoon.
But they told the Treasury Department not to be all the employees not to be taking any pictures of
it,
and to focus on their job.
Yeah. The ones that are still working.
The
construction guys are working, but the people that actually are in the government are not working.
Yes. The ballroom.
Awesome. It was. So if you read, sorry to get off on a tangent, they said, oh no, it's all private donations, and then Trump's thrown in, and then all private. And then I was reading the story on CNBC, and so they had to say, our parent company Comcast was the largest donator. Like, can you imagine the strong arm? And it's like, hey, I'm calling on behalf of the White House. We're doing a huge remodel. And if you'd like to stay in business, you'll loan some money
Right.
to
If you
us.
don't want your FCC license yanked,
Exactly.
we accept donations in increments of 50 or 100 million at a time.
Exactly.
So,
yeah.
yeah.
Oh, man.
Well, like I was telling my wife earlier today, when that story broke about him, saying the Department of Justice owes him 230 million. That was after he strong armed, what was it, ABC a couple weeks ago? What was that price tag? Because he sued them because they slandered him supposedly.
Yeah.
That was like what, 50 some odd million, I think, that he got out of that one. Yeah, they just roll over and just pay him because, like you said, they want to stay in business.
Well, that'd be like the transportation secretary calling Granite. Hey, we got this whole thing going on. What do you think?
Yeah.
Put those big green trucks.
Yeah.
You got it.
You like them, don't you?
Exactly. You like how they look right now, don't you? Oh, my goodness. All right. Well, let's get to our topic, boys. We're going to try to get some of these 7 points hammered out before we go to break, at least one of those. So once again, our topic, divorce and the family home. What are your options? So we're going to start with our first point that we've put together for you. Again, very tough situation. But, Cory, you alluded to this briefly. Let's go into more detail. Your first point is know the home's true value. You got to call Richard Lace or any other great appraiser like he is. Don't rely upon the Zillow value. Get an independent appraisal. And then again, equity determines who gets what and whether a buyout makes sense. So it all starts with that appraisal.
Yeah, it starts with the appraisal, and very seldom, I'm trying to remember if I've ever had any divorce clients that agreed on the value. There's always, what I have noticed, and maybe it was just my clients, like the one who feels like they're getting the right, like the person there's always somebody who kind of started the divorce, and the one who feels like I didn't want to get divorced always feels like they're getting the run of the deal on the value wise, if that makes sense.
Sure.
And so, yeah, you got to figure out the value. And there's two things. You want to get an independent appraisal. So if everybody can agree on someone like Richard, then let Richard go do his job. If you get two appraisers, the wife wants this one and the husband wants this one, then usually what attorneys will do is they will throw three in the hat, see if they can come up with it. If they don't, then the judge gets to decide. But the ultimate Behringer of the value of the house is when you put it on the market and sell it. And Richard will tell you the same thing. I mean, he'll come out and say, hey, this house is worth X. That's as of today. That's everything I know. By the time you get around to selling this, the market may change a little, may go up, may go down, but
sure,
you want to get a fair feeling for what it is.
But that appraisal, as we'll get into when we come back from break, that appraisal really comes into play not only if they decide to sell right away. So divorce, right? They're in the divorce. They both move out, put the house on the market, et cetera. But as we're seeing, which is becoming very common, we're seeing, as we'll discuss again, cohabitation, right? In regards for the kids, but also one spouse goes, you know what? I want to stay here. I enjoy it. And maybe I'm going to keep the kids, right? And the other one's like, hey, I'm out of here. I'm moving to, Texas, right? So that appraisal, no matter what happens, it has to be conducted again to determine all these other different scenarios that we're going to be discussing. It's a must.
Yeah, at least so you have, again, if everybody's getting along and you can say, okay, Richard came out, he says it's worth 500. I agree, it's worth, everybody agrees. Then at least now you can kind of start finishing. But if one person thinks it's worth 8, the other one says it's worth 4, then one person's going to think Richard's wrong no matter what he does.
Right.
But yeah, it's kind of a discussion starter, if you will, to figure out.
Last question. Have you seen, by going to court a lot on these, Cory, let's say that scenario where you got 3 appraisals, does the judge tend to kind of create his or her own value, or they take an average of those 3 appraisals? How does the judge, who's not a realtor, figure that value out?
Most of the time, you don't get 3 actual appraisals. You'll get 3 appraisers, and the judge will say, the 2 parties are going to pick one of these and they're going to agree on it. And if you don't, I'm going to pick one. And then as an independent third party, whatever he or she appraiser comes back at, the judge will take as fact at that point. So they won't
separate appraisals.
Yeah, they won't make them spend the money to go get the actual appraisals, but they'll make them agree on an appraiser.
Okay, misunderstood that. All right, well, there's your first thing. Know the home's true value. We'll continue on our other points on what to do with your primary residence after a divorce, or during, or before. Just never know what phase it's going to come into play, but at some point you're going to have to deal with that house. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage, Cory Edge of Edge Realty. Once again, a 218 record close on the Dow, up 218 that is, to a record close of 46,924. Nasdaq lost 37. The S&P unchanged. Divorce in the family home. What are your options? All right, we got a bunch of them for you. Let's get hustling, guys. Back to, once again, a recap, our first one, which we were talking about before we went to break, which is know the home's true value. The only way you can do that is you get an appraisal, and then that will be, regardless of whatever situation, a buyout, an outright sale, etc., that will establish the foundation for that. Okay, Cory, let's come down to point number 2. Understand the ownership options, right? So you've laid it out, basically 3 of them, and I want you and Dwight to explain them. First option, sell and split, right? That's the cleanest. Go to Cory, say, I want to sell the house, sell it, take those proceeds, divvy them up, whatever that ratio you guys depend upon. Buyout, one spouse buys out the other. Co-own temporarily. So Cory, go into details on sell and split first of all.
Yes, and again, sell and split. It's sometimes it's the hardest emotional wise because you're getting rid of it. Sometimes it's the easiest because nobody wants to deal with the house. But you're going to sell the house. You're going to get the proceeds. It's a lump sum. Depending on how the divorce is going, you split it 50-50 if that's what the judges agree to and everybody's agreed to, and you get to move on and everybody kind of starts fresh and there you go. So that is, again, the easiest to figure out who gets what. Maybe not the easiest emotional wise. The buyout, and this, I see this.
Stop you real quick, though?
Yeah, please.
And folks, if you own property in California, make sure your accountant is involved in knowing what's going on with this divorce and the sale, because many times you can get caught where you think, I get the $500,000 exclusion because we were married, right? And maybe you get divorced halfway through the year or something. There are some very, very stringent laws as to who gets it, right? Do you get the $500,000 or do you get 250,000? So on and so forth. Again, whole nother show, but just let your accountant know, hey, we're going to be selling. What's the expected tax ramifications, if any? So
Sure. Yep. Absolutely.
okay.
So now on the buyout, and I do run into this one a lot. I think a lot of times people start out this way and then they have to figure out if they can really do it. But this would be to say, hey, we have, let's just pick a round number, $100,000 in equity. So you owe me $50,000 in this divorce. Well, the only way and I want to be off of the deed of trust. I want to no longer have my name on the loan. Well, that means the spouse that's staying has to go get, Dwight, correct me if I'm wrong, probably a cash out refinance to get their hands on the 50,000 plus get the other spouse's name off the deed of trust to pay him or her out and retain the house.
Yeah.
And so I do see a lot of times, most of the time, that's the route that people start with.
Yes.
I would say at least 50% of the time it doesn't work because of trying to qualify on your own.
Okay. So Dwight, now you come into that equation.
Yeah. Cory's absolutely correct. So the buyout sounds good, but remember, a cash out, I could go only to 80% loan to value, right? I mean, unless you want to go get a HELOC, but typically the house was typically purchased with 2 incomes. So now you're going and doing a cash out. So do I have enough equity? The further the equity position, the harder it's going to be for that one person to qualify. Now, that doesn't say it doesn't happen, but Cory's right. It starts out that, and pretty soon you go, we're just going to sell it, and I'll come back to you, Dwight, when I've got my money. And sometimes I get both parties. You can try to be amicable, the whole thing, but that's a tough one. It's a really tough one, but it can be done.
What I've excuse me, what I've helped clients with in that scenario is, and it gets really messy, is going to the 401k and borrowing from their 401k to use some of that cash to pay the spouse that you're trying to buy out. Now, where that can get messy is typically, of course, in a divorce, spouse is going to get half the 401k. So this is where you start kind of playing the whack-a-mole game. It's like, I'm going to give you this, but I'm going to keep this, and I'll give you that, and I'm going to keep that, right? And you start negotiating around with all the different assets. And again, the more money you have, the more complicated it gets. But I've seen that done a lot, again, where you just go tap the 401k, borrow against it, and, deal with the loan payments, etc.
But Jon, that's why, in the beginning, when Cory talked about know the value, that's the nucleus where everything else works around it, right?
Yes.
And
right.
It's the hub, and then that everything gets to split off of that value. But these are great points, but real world gets tough.
Yes.
So you need people like you, me, Cory. Cory helped me go through mine. I mean, because you just aren't clear headed half the time. You're just trying to figure it out, and somebody comes in like Cory. I mean, anybody listening or watching, that's the man, because I wasn't easy. I'm never easy, and he took me right through it too. So you got to have the professional there.
Yes, indeed. All right, Cory, to our third point under understanding ownership options, we had sell and split, buyout, the co-own temporarily.
And this one is
for the benefit of the kids.
Well, usually for the benefit of the kids, but it's very popular now because of the low interest rates. Nobody wants to give up the interest rate that they got back 5 years ago. And so I've seen co-ownership temporarily because they don't want to get rid of it. I've seen cohabitation during the divorce because they have their living expenses are so low based on the rate they have on their mortgage that the other spouse can't afford to go out.
Mm-hmm.
The thing here is to remember, again, to me, my personal idea or my personal thoughts on it, you have to have an agreement to start. And then if everybody says, hey, we're going to keep the house and we're both going to live here, or we're going to keep the house and you're going to move out, but we're going to retain it, you need to figure out the value it starts at. If you're going to keep it, who's making the payments? Are they still 50-50? Who's going to live there? Have everything in writing if you can. I don't know. I'm not smart enough to know if that would be in a divorce decree or a separate agreement, but somewhere have it written down that we're going to keep this asset. Here's who's paying for the asset. When we sell the asset, here's who gets to keep X amount, 60% versus 40% because people are making different payments. All those things. It's a business arrangement at that point, John.
It is. Yeah. And again, I want to add one more thing to your great point, Cory. Cohabitation is very common, but also it's becoming very common I've seen with clients is, so let's say you got Sally and John Doe, right? John says, okay, let's keep this for what Cory said, the low interest rates, or usually it's for the benefit of the kids, right? The kids are embedded in schools and sports and they don't want to disrupt them, at least, during the school year, for example. So John will move out. Now, John, of course, he's got now rent, right? He's going to go rent an apartment, go rent a house. And then what they'll do is they'll swap where John will come live in the house Monday, Tuesday, and Wednesday, and Sally will go live in John's apartment, Monday, Tuesday, Wednesday, and they swap things like that. Well, again, I've seen it also where John will come back and Sally will still be there, right? But John still has this expense. So there's a million different scenarios, but I love your point, Cory. Put it in writing because inevitably when the house you finally do decide to sell, I promise you there's going to be hurt feelings and John's going to go, wait a minute here, I get more money because I had to go rent an apartment for $2,000 a month and you got to stay here, Sally. And you see how all that gets really cool.
But
Well,
John,
yeah,
to Cory's point though, it can all be articulated in a settlement agreement. Every
Yes,
bit that you
yes,
talked about, Cory,
absolutely.
can be put in a settlement agreement. So that's a good point. Get it all written down, have it done by an attorney in a settlement agreement.
Yep.
So
And
there's
then it'll be in the divorce decree when it's all said and done.
The other thing, while we're on this point, and I brought it up a couple years ago, most mortgages are Fannie Mae or Freddie Mac. Even if they're not Fannie Freddie, they're still on a traditional Fannie Mae deed of trust. Those deeds of trust allow for an assumption by the divorcing spouse. So if one spouse moves out and they want to take over the loan, they have the right to assume it and keep the interest rate. They still have to qualify. They still have to go jump through the hoops, but it's the only time that I know of, Dwight, correct me if I'm wrong, that a Fannie Freddie loan can be assumed is in the case of these divorces.
But to your point, qualifying and it doesn't apply to jumbo or other, so Cory's right. But that's something we really, I didn't even know, I wasn't aware of. And, it's a good feature in there for those that can take advantage of it.
Absolutely.
But you got to qualify, like Cory said, but you at least get to keep the rate.
Yeah, which of course so very important in this environment. All right, we come back, we'll hit point number 4, which is, or excuse me, point number 3 is all. Factor in affordability and taxes. Okay, so obviously we're not going to get through our 7. So what do you guys say? Let's carry this over to Thursday's show, right? So we'll get we'll come back and wrap up point 3. Speaking of wrapping it up, let's do it in the Right Now Traffic Center. Nobody better to do it than the wonderful Kristen Snow. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Cory Edge of Edge Realty. Phone number, sir.
673-6700.
Mr. Millard, Highlands Mortgage. Thank you, fellas. Do appreciate it. All right, what to do with your primary residence after divorce? We said number 1, know your home's value. Number 2, understand ownership options. Since there's 3, you sell and split, you do a buyout, or you co-own temporarily. Number 3 is factor in the affordability and taxes. And we actually pretty much touched on that. Again, post-divorce income may not support the old mortgage. You got to consider the tax ramifications, as I said, when you sell it, the $250, $500 exclusion. Get your CPA involved in that. All right, let's go to point number 4. Protect your credit and liability.
Yeah. We don't care what the divorce decree says because half the time they're never fulfilled. So, let's just assume that both people are on title. So I would just recommend, don't just go do a quick claim, for whatever reason. You need to be fully off the liability if you're, depending on what the agreement is. So the only way you can do that, Cory said there is a provision, the Fannie Freddie docs, that allow you to assume if you can qualify. But outside of that, generally it's a refinance. And John, most of the time you got to bring in a co-borrower, because you're only you bought the house with two incomes. You're going to most likely need a second income. So you see that. And if you have a HELOC out there, especially with a zero balance, freeze it right away so neither one can go write checks.
That's a good point.
That creates a real problem at the end.
Cory, judges don't like that too much either. If you decide because you're so upset at the spouse that just filed for the divorce, and you go tap that credit line for $100,000, all of a sudden now there's a new debt that nobody knew about.
Yeah, they will figure it out eventually. If the person, if everybody's got the divorce attorneys, which they're very nice people outside of court, but when you get a divorce attorney in court, they're very vicious, and they're going to go. I mean, I say that with all due respect. They're going to find stuff. They're going to come after you, and if you took the extra 100,000, you'll probably end up repaying 500,000 because of it. So most of the time, it's not worth trying to pull one over on somebody.
Right, and that goes same thing for credit cards or anything.
Absolutely.
Else. Or don't go out and incur a bunch of debt, under your Visa card that's a joint account, right? And same thing, just don't do any. And most bankruptcy or divorce attorneys will say freeze everything, and you actually have to sign a document saying, you know what, no buying, no selling, no doing anything. Everything is frozen at that point.
Yep.
All right, Cory, let's go to point number 5. Plan for future housing needs. Right, we get this one behind us, but we still need a roof over our head.
Absolutely, and especially when there's kids involved, right? And that's always kind of the crux is, do I want to stay in the same school district? What do the kids want to do? Okay, now do we need to, can I rent here? Do I need to buy something? Is an apartment big enough when the kids need to come see me? All these different things. So you got to plan for future housing needs, not just in the buy-sell side of it, but just kind of the living side of it. Like how, when this is all said and done, hopefully there's 2 incomes for 2 separate people. Is there enough to support the family in the best way that you can until they become of age and they can kind of move on their own? So that's always a big thing. And that is what the judges will look out for. Ultimately, their job is to protect the kids, and
yes,
rightly so.
All right, I think we can squeeze in point 6 and 7. Include the home in the broader financial picture. Like I was saying, the whack-a-mole. It's like, I'm going to take some money out of this house, but I'm going to give you a portion of the 4K or something like that, right? That's what a good divorce attorney is going to do. And then Dwight hit the 7th point. Involve professionals early. The financial advisor, the CPA, attorneys, etc. Makes it so much easier. Just get everybody involved, everybody on the same page.
3 of us right here. Add an attorney. Absolutely, John. Absolutely. Very important.
And a CPA. Absolutely.
And a CPA. You got it. All right. We hope that helps you. Hopefully you never have to listen to this advice, that's for sure. But if you do, now you have some good information behind you. God bless. Have a great afternoon. Don't forget to pick up our podcast. We'll be back tomorrow on the Jon Sanchez Show. Take care.